Earlier, I posted a set of trading rules that's been working well for me. That's been achieving a short term, but it's been achieving over 80% win rate and an average win to loss just shy of 2 to 1 with very little drawdown. And there were a couple of examples today on the New York Open. This is what is this, May 26th. And I thought I would use these as examples in a video as opposed to the written form that I posted earlier. So let's take a look at it. The first rule was to take a look at a higher time frame chart to determine a trend bias, and I do that in at least two ways. One is I use a monthly, weekly, and daily moving average line. You can see the dash blue, the dash white, the dash red, and the period settings of those EMAs are established to reflect the month, week, and daily, and they've been working out real well for me. You can see that we had a crossover here back on the 20th or so of May, and it's been upwards since then. So that's one way I determine. Then the other thing I want to look at on a higher time frame chart, such as this 4-hour, and I do the same on the 1 hour, is the fair value gaps. I want to make sure that price is being delivered from, in this case, would be a bullish fair value gaps, and we've got certainly one of those, which is the dashed border on this green one right here. I'm sorry, that's the 1 hour. The 4 hour is this solid outline on this green. That's the 4 hour, which is still intact. So the 4 hour looks good, and I also look at the 1 hour, and here you can see this is the 4 hour fair value gap that's showing on this 1 hour because it's got the solid border, and then the 1 hour is this one with the dashed line, and and again we've had the monthly, weekly, and the daily moving average lines that you can see here that are all in the upward trend. So that would have shown me that we've got a continued upward bias. And then what I do is I look at my primary chart is I've been using the 15-minute as my base chart, and I'll drop down to the faster charts to enter, but I look at this chart and I look for opportunities for pullbacks to the in this case discount area, because it's an upward trend. And you can see that we actually had twice it pulled down to the discount area, the 50% fib. If you put this fib on this high right there, we had a pull down to the 50% right here. See how it just tapped the discount area and then reversed up? There were some trade opportunities there. That was at 745. And then we actually had another opportunity right here. If I put it a high right there, excuse my dog in the background, and there's a pullback that we got down again to a discount. Here's the 50% fib, and that's key to me because what I do is I put on the 15-minute chart this magenta horizontal line right there, and I put on that an alert to to provide a pop-up alert on the chart, a sound alert, but importantly an email that's sent to me that gives me a screenshot of the chart itself. So that happens when price falls to that discount area because I'm expecting a reversal once that happens, and sure enough we got it. And you can see here's a bullish SMT right here that happened to fire. But then if we drop down to the to say the 2-minute chart, or maybe even the 1 minute, and let's get a time on that. That's a 9:45 candle, so I would be looking at the 9:30 to 9:45. So let's drop down to say the 1-minute chart, and here's the 9:36 candle right there on this 1 minute. And you can see, sure enough, I hope you can see it, there's a bearish fair value gap right here. It's maroon in color. And this big rectangle is my initial balance based on the first hour's high and low. But and I don't hesitate to take trades during that. And you can see that we had that bearish fair value gap that was mitigated. And so an ideal entry could have been right as it closed above that, which is this candle right here. So an entry would have been actually right here. And my first target would be up at this high of this local 1 minute chart high, swing high rate there, taking maybe 2 of 3 contracts off, and letting the remaining runner have its way, hopefully to the upside. Now, also, my stop would be one of 2 places. I would place it below the bodies of these candles right here, which is below the fair value gap that was mitigated. But I also have my indicator that I made that prints a stop line based on the ATR, average true range. And actually will, after a number of candles, it'll actually tighten up a little bit, and that's something I can adjust as I am inclined to do, or as I feel the need to do. And again, look at here's the weekly moving average, this white line. See, it's sloping up, and as is our daily, which is the dash red line. And our monthly is well below this. There's the monthly, the light blue one there. But I think we had everything in place. We had I like to see a V reversal, and there's somewhat of a V here. Maybe not real sharp. A little bit of hesitation here, but I think we had all the items on our set of rules that ticked off, including the higher time frames giving us a support. Also and also we had a liquidity sweep, because here, if we look at this low right here, we see that we had a sweep of liquidity right at this point, or maybe some would call that a manipulation. I struggle to really see manipulation. It seems great in hindsight, but I don't see it in real time. So I just look for a sweep of liquidity and a mitigation of my fair value gaps, and making sure I've got support on the higher time frame. So working real well, and I'll continue to test this and see how it does. Very little drawdown. You can see here only a few ticks drawdown. If the entry was right here, what is that? Couple of ticks at most before it took off and hit our initial target. So that's it from here, and happy trading.